Yesterday, while we were on air, Donald Trump was landing in Riyadh in Saudi Arabia for his first foreign visit since resuming the presidency. While that was happening, reverberations from the retreat from the trade and tariffs war, as you heard Bessa say, with China was still bouncing around the markets. So let's bring in here Thomas Tor, Head of Investment Strategy for Asia Pacific with BlackRock in Hong Kong. Thomas, many thanks for your time. I mean, I just noticed your own report out today saying just because they've got this 90-day truce, the impact on companies, the impact on global economies and the markets is still going to be ongoing, isn't it?
Yes, I think that's the broad summary. I mean, certainly the expectations for tariff hikes and the news over the last couple of days around the détente with China have been a risk-on type of move because, you know, a 90-day pause is obviously great. We still don't really know what the final implementation, final baseline numbers are, but they are certainly being calibrated lower by the market, which is driving risk on sentiment to the upside across not only Chinese equities, but also US equities. I think the broad summary is, you know, this is good, but we continue to expect volatility. I mean, we've seen a 20% move to the downside and now a 20% bounce in the last 2 months. So positioning your portfolio for that kind of environment is obviously quite difficult, but the sentiment has definitely gone more risk on over the last few days.
And the really interesting part about this is even though the 145% tariffs are gone, there's still a 30% tariff on goods going from China into the United States. That's almost skewing trade in some ways with a lot of, you know, retailers and others, manufacturers in the United States right now really trying to fill their boots and trying to fill containers to get goods into China before this 90-day, into the United States before this 90-day period expires.
Yes, 100%, and that would be the expectation. Front load supply chain orders, get those goods into the country before the 90-day tariffs are over. And so the inflation picture over the next 3-4 months on a month-by-month basis is going to be very interesting. And this was kind of the baseline even before the détente that we saw was essentially, you know, no matter what the final number is, the number is still higher than the number at the start of the year. And so it is more of an inflationary type of environment that impacts the Fed that are in a difficult position of trying to maintain the labor market, but also to keep inflation low. And similar to what we're seeing in Australia, in the US, the expectations for Fed rate cuts have come down significantly. In fact, the market's only pricing in 2 for the rest of the year, and pretty much a 0% chance for the meeting in June.
But as you look around other parts of Asia Pacific right now, leaving Australia or China aside, I want to concentrate on Vietnam for a moment because not only is it a major producer of manufactured goods, clothing, but also it's a big steel manufacturer, which is clearly playing a key part in this trade war. And it was originally hit with 45% tariff. So again, it's got a lot to play for in the outcomes of what comes next.
Yeah, I mean, as I said, the baseline for all economies, I think this was really driven by the US-UK deal last week, but the baseline for Asian economies has come down in terms of the tariff number. So net, that's obviously good. But I think the main consideration for a lot of the economies here and a lot of the exporters is going to be the US dollar. We've seen a lot of appreciation going on, particularly in the Taiwan dollar over the last couple of weeks, and the reverberations we're seeing in the rest of the Asian FX market obviously has a big impact in terms of earnings and overall profitability for companies here. So Vietnam is not really one that our investors are looking at from a secondary public market expectations perspective, but certainly places like India, Japan, South Korea, Taiwan, you know, all of these economies are going to be impacted by the tariff situation and the overall appreciation of US dollar in the short term anyway.
I'll tell you, it's going to be fascinating just for not governments, but also, as you say, for central banks. They are in a pretty tough position trying to decide on the next interest rate moves. Thomas Tor from BlackRock in Hong Kong, many thanks for your time.